Hey guys, how's it going? And thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't, so let's get started. So in this video, what we have going on are 3 stocks that I'm buying for March 2018, and there's actually an honorable mention at the end, so total of 4 stocks. The first stock I got going on is more of a safer stock, and the other 2 are more like growth and aggressive growth, and then the honorable mention. First, let's talk about what the heck happened in February. There was a correction that happened. The market went down, at least the Dow went down 10%. A bunch of stock, basically all stocks got destroyed. People were screaming and running all over the place, but as you can see, it is rebounding. A lot of stocks kind of rebounded already. I mean, it could always go back down. However, I think the bottom kind of left us. I do realize that I think for the rest of the year, it's going to be very volatile, unlike 2017, which was purely up every single month. Now, since this correction, some of these stocks are still at a little bit of a discount to get in for like a sale type of thing, so not a bad time to buy. So first stock that I'm buying for March 2018, our safe stock is Johnson & Johnson. Now, everyone knows what Johnson & Johnson is. They have a bunch of different brands out there that everyone's familiar with, whether it's like Tylenol, Band-Aid, stuff like that, Listerine. So definitely a safer stock. You know, if there's a recession, people are still going to buy their products. Now, they did get hit by the correction and as well as a possible lawsuit going on with their baby powder because it is cancer causing. Now, don't get me wrong, that is a bad thing, but the stock did take a bit of a hit because of that. So you could see this chart, 1-year chart, it is down around 130 area. You could see a little bit further down as well. They do have a very good dividend of currently around 2.5%. So like definitely much better than a ridiculous savings account. So here I just wanted to show you their revenues real quick. For the past couple years. So it is up and down, but overall it is fairly stable, kind of bounces around, but still safe, as you can see. Looking into the statistics side, their PE ratio, their trailing PE for last year is just outrageous of 276. But you can see what's going on for next year, or at least expected for next year, the forward PE. That is 15. Now, fair PE could be maybe around like 16, 17, 18. So this is actually a pretty solid pick. If the market is going to continue with these ups and downs the entire year for 2018, guys, a safer stock like Johnson & Johnson is a good pick in my opinion, especially since they have those dividends. So if the stocks go down, you still get income from that just to stay happy. Now, the second stock we have going on for March 2018 is Boeing. Boeing did an amazing year last year, up over 100%, guys. Yeah, you would have doubled your money in Boeing. You can see that chart over there is very, very cool. Their PE, you can see right there, 26.5, and they do have a dividend just under 2%. Now, I want to show you guys their revenues. You can see they are kind of stable looking just at the revenues, but moving a little bit further down, what's even more attractive is the net income. You can see a couple of years ago it was 5, a little bit less than 5, but now it's at 8 million. So that is a huge growth. So if you didn't know, Boeing does produce and make aircrafts, you know, Boeing 747s and stuff like that, and they also involved with the military. Now, especially with the government talking about increasing military spending, that's definitely a pro for Boeing. Now, looking at the statistics, their trailing PE, like we said saw before, 26.5, and their forward PE of 21. So it is a little bit high, but with this, I believe it's continued growth. It's not too bad at all, actually. You could see their 52-week change, like we saw before, close to 100%. It's been amazing. Now, I like Boeing because it's kind of a mix with dividends. In case it goes down, you still get those dividends, but there is also growth involved. So it kind of has a little bit of both. Now, my third stock that I recently started watching, very interesting, is Align. Align Technology Inc. They make those Invisalign braces. If you guys have heard of that, I think that's definitely a popular brand. So it's basically like get those metal braces that no one likes, or Invisalign. They actually use 3D printer to print up these basically braces that slowly adjust your teeth. So their growth is amazing. Let's get into it. You can see their 1-year chart. Their PE ratio is high. We're going to see that in the statistics in a bit, but 91, and they don't have a dividend. Now, Align is a small and growing business very well. You could see these revenues and everything for the past few years are just exploding, basically, doing very, very good. So now the statistics, looking at the PE, we saw 91 for the trailing PE and the forward PE of 46. Now it is a little bit high. However, if you do look at the actual growth of it, it's kind of justifiable. I mean, the revenues and net incomes are increasing. Their balance sheet is amazing. They have like no short-term, no long-term debt. They have cash available. So it is definitely a good business to get into, in my opinion. And you can see their 52-week change to the right a bit is around 150%. It was amazing in 2017. I think it was the best performer in the S&P 500. So that's kind of my aggressive growth pick. I do see their market increasing. I think their brand is actually very well known. That, you know, if I wanted to get dental work done, that's definitely a name that pops out to me, especially if you don't want to deal with braces. I mean, like the old-fashioned braces. The cost is still very similar, so it is costly, like several grand, but it is more attractive. You don't have metal in your mouth. You just have clear plastic. Thinking of the long term, I do see growth for them. I know a large part of their market are adults, and if they could get into like teenagers, like middle schoolers, like normal braces, that could be a huge business. Most people's mouths are screwed up. My source is going to middle school and seeing people's mouths screwed up, including mine. So I think it's a very interesting pick. So those are my 3 stocks, but let's move on to our honorable mention, a stock that I've mentioned on this channel quite a few times, Disney. Disney is very, very interesting. You can see their 1-year chart is nothing spectacular at all. The CEO even states that 2017 was basically a reset year. You can see their PE is 15, and they do have a dividend currently at 1.6%. Little more stats with Disney, like we saw trailing PE 15. And their forward PE is just under 14. So it is a little bit undervalued if you just look at the PE. You could see their 52-week change is actually negative. Now again, I've said this multiple times with Disney, I see very good growth for them. Just to name a couple of things. First of all is Disney. That brand is just huge. Every superhero basically is owned by them. They're trying to get into streaming, so they're going to be a competitor with Netflix. They have Star Wars, and a bunch of new movies are coming out from Disney. One that just destroyed it was Black Panther. We have A Wrinkle in Time, so that's probably going to be a big one. And I heard The Incredibles 2 is coming out. The first one did very well, so the sequel should do just as well. So the brand behind Disney, I'm not scared on holding on to them. Plus they do have a dividend in case things don't go as planned. So that's why I like Disney as an honorable mention. So guys, if you have any questions, comments, concerns, please leave them down below. I'd love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe that we could get a hold of our money and stop following the man. So thanks so much for watching, guys, and I'll see ya in the next one.